All right, folks, and right now, we're going to jump over to our man, Tim Ord. Check out his website, folks, ord-oracle.com, and those two great webinars under the Services tab at TFNN, The Secret Science of Market Tops and the 6 Secret Ratios Every Trader Should Know. Tim Ord, good afternoon.
So let's jump in it here. We had a little technical problem, so we kind of wasted 4 minutes, but yeah, we got the charts up, right?
Yes, we are good. Let's go for it, Tim.
All right, so October, let me get my drawing tool here going. All right, October, which is this month right there, hit a higher high on higher volume. You can see that volume's higher than, I don't know, the last 6 months or better. And in November, we didn't touch that high, and I thought we might. So it doesn't matter what the volume was on October, because we hit a new low on actually lighter volume that was bullish, but we did not touch a new high. So December, I think we're probably going to touch a new high, and volume's going to have to be at least 1.78 billion shares, ideally, or more, because once you test a previous high, if volume drops 10% or more, that previous high is going to be resistance. If you test the previous high on about equal volume or preferably higher volume, that previous high won't be a resistance and market continue higher. So you can think volume more or less is just energy. So the more volume it has, the more energy it has, and you should move higher. If you look here on the bottom, the VIX, even though we're close to the highs here, the VIX, relatively speaking, you were right around 16.5, and that's not rising. At least, and it may not, and that's ideally going in, if you're up against the highs and the VIX is not rising, usually that's a bullish sign. So, but this is a monthly chart. You can't really see the interdays, but I'm thinking at minimum, we are going to test the October highs, and the October highs will be proof of the pudding, what happens next. This is a weekly chart. I wanted to point out, too, a lot of times when you touch the upper Bollinger Band, this one we did right there, a lot of times those are resistance. The Bollinger Band is actually still rising. It's a little bit above the October high. So even though we go back to the October high, which I think we will, most likely this month, if not in January, but yeah, we're going to, at some point, going to test that October high. We tested on higher volume, or at least equal volume, that rally should continue. So you need a test of the October high. VIX is not really saying much, it's staying low. We had a big spike in the November low. To me, that was a selling climax. And that's the kind of exhaustion move to the downside. Now we're having a rally up and kind of moving along here. This is the daily chart. We're kind of going sideways right here. We're up 5 days in a row going into last Friday. That predicts market will be higher within 5 days, 83% of the time. So even though we're not backing away from the highs, we're kind of just chewing up time here. And we hit the gap. The more times you test the gap, the more times it goes away, I guess you might say. So we're not backing away from that gap. That means we're probably eating through it, and we're going to take a shot at this October high. So how that works out, a lot depends on volume. I had ZBT up here, Zwag Breast Thrust Indicator. I guess I didn't put it back up. But I think it was last Thursday or Friday, it hit 0.38. Then on Friday, I think it went to 0.4 something, 0.42 or 3. And that triggers the Zwag Breast Thrust Indicator. A Zwag Breast Thrust Indicator is kind of an advanced decline type thing. And it's kind of once you have a selling climax, you should see a sign of strength off of a bottom, either volume-wise or advanced decline lies, or both. And the ZBT has to go from 0.4 to 0.6 in 10 trading days or less. And 10 trading days comes in Friday. And right now, I think we're on 0.54. So we have a shot at it if the market continues to rally here. I hear the music.
All right, folks, we're going to come back. We'll talk. We're going to finish our conversation up with Tim Ord. We'll talk some markets. We'll talk some metals. We'll talk some gold. Stay tuned, folks. We're coming back. back, folks. We're talking to Tim Ord. Remember, you can reach Tim at his website, ord-oracle.com, and those 2 webinars right under the services tab at TFNN, folks. You check out those webinars, each $149, and once you buy them, they're on your members page. You watch them as many times as you like. All right, and I see a little inflation, deflation up there, Tim.
Right.
Where are we going to next?
Actually, we're going to skip down a little bit because I want to cover this. This is the commodity index, GSG. This chart goes back to 2009, and this is William O'Neill's cup and handle thing, and you kind of have to visualize it, but this is the cup, and this is the handle. And how this thing kind of works, the narrower that handle is, the more bullish that pattern becomes. And if you notice this, from the low of 2020 up to the high of 2022, it only retraced about, it did retrace 38.2%. That's it. That's a real narrow retracement. That shows, so every time the market fell back, there were buyers. And now the Bollinger Bands are just starting to squeeze a little bit. And they're actually starting to expand out. At the same time, they're kind of expanding out. If you look at the volume right here, over the last 3 months, thereabouts, the volume's been increasing as those Bollinger Bands are starting to spread out. A lot of times, if the market only traces 38.2% retracement, a lot of times that's at least the halfway point of the next move up. So I'm thinking this stock is probably going to double. We got some resistance back in 2010, 2000, back in here, but I think we're going to go back to the top of the trading range, around 40. So this is commodities. There's a lot of, you got oil, you got metals, gold, silver, anything commodity related. This chart, anyhow, it's a commodity chart. So the commodities are going to go up, in my opinion. This is really a bullish graph. I own it. So even though the stock market, the equity market actually looks fine, I think next year is probably going to be another up year again. It's kind of like surprised this year was up this much, but the market's making a little bit of a switch. I think some of the energy out of the equity market is going to go in some of these other markets. Gold is one, and the gold stocks is one, which I think gold stocks will outperform the NDX stocks over the next, I think, actually several years. And this commodity index is going to outperform going forward too. And a lot of times, this halfway point right here, again, is a midpoint, and you should see something that'll look like this on the next move, pretty much straight up from 2020 to 2022. So I'm thinking we're just going to go straight up to a 40 over the next, year or so. So an impulse wave comes after consolidation phase. The impulse wave comes. Well, this consolidation phase on GSG, in my opinion, is ending or near an end right now, because we're starting to see volume to pick up to the upside. It really hasn't performed really good. Well, it hasn't performed very good at all since 2022 has gone sideways, and it's a narrow sideways trend. So I'm thinking this GSG is pretty much going to be explosive. But I bet a year from now, I think we could see a double. I don't know, or close to it, or somewhere in that vicinity. So that's
pretty
that.
cool chart.
Cover that.
Thanks. They're bringing it. I think they got like $1 billion. I was looking up that ETF as you were talking about it, but that's a pretty cool chart, man. And yeah, not a bad pullback at all in terms of some of the market volatility. And here's an ETF. The only pullback was almost 24 to 20, and I know we were well above and well below. But that's a cool chart, man. We'll see. Yeah.
Yeah, it's so this is a monthly chart. So I kind of always look at the bigger trend first. And if the bigger trend is bullish, then I start going down to smaller trends. But this trend looks really good, especially with the volume starting to show some signs of strength coming out here. So when's this going to break
Tim,
out?
I have to. This is so I try and look at the gold report, of course, right? And it's like I say to myself, pressure's obviously on the next Fed. The story's out today. Maybe Trump's going to nominate. He might have it picked. Maybe he tells us early next year. Nonetheless, we're getting a new Fed chair. Pressure's on lower rates. maybe that's going to lead to a little bit of pressure on a weaker dollar. And, that would help commodities too. Just giving you a little, as I look at this, I'm saying this is quite a setup here when you come into, anyway, as those line up, just something that I'm thinking about.
I'm thinking he's going to pump everything up.
Right.
Which is good
I
for
say
the
the only
short
risk
term,
is that it runs too hot, but that's not a short-term risk too, so that's what it's like. You run it hot. Hey, you run it hot, and then they can always hike it. I get it. Right. And so, you run it hot, man. Let's run it hot. And if you run it hot with low rates, though, we might get a weaker dollar. But guess what? You get a weaker dollar, everything else becomes more expensive when it's priced in a weaker dollar. So, hey, we'll see what happens.
What I'm thinking, this is actually going into 2000. And 2000 led to a huge decline. So I think Trump's not going to my opinion, Trump's not going to let this market decline. I think he's going to kick everything at it to keep it up. And so, when he gets out of office, I think that's the time where things could be ugly. But that's 3.5 years away. So we'll see how it goes.
I agree a lot, and that's hey, you run it hot, man. There's risks on both sides. So I get it too. I do in terms of there's risks on not running it hot, right? That's what he wants. It's like okay, and then you look at the debt right now. I say this all the time. It's like well, the risk of running it hot is inflation, right? Well, that actually helps the debt. So I'm like, okay, that's a risk. And then so I'm like, yeah, maybe we'll just run it hot, man. And, boy, I can't wait for mortgage rates, car, it's big time. It is for sure.
Yeah, it's big time. There's a big change going. We had basically kind of a sleepy economy per se. It was okay over the last 4 years, but Trump walked in and he's doing, gold kicked off. And actually, here's another chart. This is kind of a momentum chart for gold. We've got about a minute or so. I just want to point out exactly where we are right now today. And this is momentum of up-down volume. Seems to work a little bit better than advanced decline on the second indicator up. So I pay attention more to the up-down volume. And once it gets up around 30, which we did here back in, October, I think it was. And previous times it got near 30 was 2016 and again in 2019. And when it hit, the rally still lasted another 5 months after that in 2016 and over about a year in 2019. So how long, before you get a consolidation, how long could this rally last? Well, right now it's still on a buy as long as this indicator stays above zero. So I'm thinking we may flip sideways here for a short while. Then actually I think we start making higher highs again because this indicator is not really backing off a lot. I mean, we're plus 15 and a half right now. To get it bearish, it needs to go below zero. So even though it has backed off some, plus 15 is not a bad place to be. It could be something like that, kind of go sideways here. And so I don't know. It's not I do think a consolidation is going to happen, but this trend is still in the early stages, I think. So we're going to benefit from it. So
I like it, man, and I align with a lot of what you're thinking. I do, and those charts, thanks for bringing that ETF to our attention. Those commodities, man, watch out. Folks, check them out. 2 great webinars under the Services tab at TFNN. Some of those ratios we talk about right here today, and then ord-oracle.com. Tim, thanks so much. We'll talk to you Thursday.